All right, we see Nigeria's brewery sector stands at a crossroads. We head as we're, pushing fully in 2025. Once a robust contributor to the nation's fast-moving consumer goods as FMCG landscape, the industry faces serious headwinds, ranging from foreign exchange volatility and rising interest rates to high operational costs and declining consumer purchasing power. Let's delve into the AfriInvest 2025 brewery sector update to uncover the realities on ground. Joining us for this, we have Damilare Ashimi, who's a macroeconomic strategist at AfriInvest Research and Consulting. Great to have you on the show.
Good afternoon, Ladi.
Yeah,
Thanks for having me.
Yeah, it's great to have you. So, definitely we like to, put the spotlight on some of these industries and sectors to see how, the general business environment is, especially for that sector. We're looking at the brewery players, now the brewers at this point. So talk to me about how, FX volatility, how that's impacted the cost structure and profitability of the major brewers in Nigeria over the past year and what we're seeing in this, maybe the first quarter of 2025.
Yeah, once again, thank you for having me, Ladi. So if you look at the industry performance over the last 5 years, it has been very challenging. The magnitude of the pressure on the industry became worse in 2023 following reform rollout by the new government, especially as it affects FX, energy prices, as well as PMS. You recall that the new administration in 2023 removed what I would describe as subsidy across those three major variables that have been largely subsidized over this year. Electricity tariff, the subsidy was largely removed. PMS subsidy was largely removed. And the one that had the biggest knock-on effect on producers was that of FX. So because businesses typically plan at the beginning of the year, nobody saw that coming. So the last 2 years saw the brewery industry recorded a combined loss of above 500 billion naira. In 2023, the loss was in the region of about 253 billion for the 4 listed breweries. And last year, it's even increased to about 263 billion. Now, of course, what caused that was more of the FX impact because Nigerian breweries imports substantial amounts of their input. But more importantly, the inability of the brewers to fully pass on the cost effect on consumer was the challenging factor because knowing fully well that brewery products are discretionary products, so level of consumer elasticity to the product is relatively up there, unlike food items that consumer might not be very elastic in terms of reaction to it. So, but we are beginning to see a glimpse of hope. We are beginning to see glimpse of hope from several perspectives. One is the fact that, especially beginning from Q4 2024 last year, after strategic actions by brewers, including raising of prices of some of their strategic brands last year, and also the gains around FX stabilization, because after the major shock we witnessed in 2023, whereby the FX depreciated by more than 60%, and also in the first half of 2024, we also saw more than 40% further depreciation. So we moved from about 481 in 2023 July. We ended 2023 at 907. Then we moved from 907 to about 1,008 at some point mid last year. But following the excessive volatility, after the CBN was able to restore some sort of confidence from foreign investors, reduce FX exposure, and reform the banking and other sectors where demand for FX is always elevated, we have seen the naira, stabilize around 1,516 level, and that was positive to brewers. And also on the energy side level, the major giants in the Nigerian market, in the person of the Dangote refinery, came on stream late Q3 last year. And with the price leadership strategy of that business, it has also helped stabilize the price of PMS, which at some point, both PMS and diesel anyway, which at some point was in the region of 1,003, 1,006 level, and has helped rein in those prices a bit. So the relief from CBN effort, the building of the reserve, the increased intervention in the market, the reduction of speculative activities has kept FX rates stable. And this helped the brewers because as they were able to premiumize some of their strategic brand to increase revenue, because revenue last year, in fact, outperformed our base case projection. We projected about a 39% revenue growth for the industry, and the industry did 71. That shows you the level of price adjustment that took place last year. But more importantly, they were able to manage some of their costs as well, especially around FX cost, because the FX volatility reduced, and also many of the brewers exited their foreign denominated position, which has been piling pressure on them. For instance, a notable player that exited their FX exposed segment last year was International Breweries, offsetting their legacy debt of about $379 million to an Abu Dhabi company. So there was a rights issues. Nigerian Breweries also did rights issues last year. So the injection of those equity capital, the increasing of price, the relative stability in the macroeconomic environment, plus the resurgence in social life in Q4 were the turning points. And that Q4 performance, where at the end of Q4, we had industry profit at about $7 billion, was sustained in Q1, which has then given the hope that barring any major macroeconomic shock that will cripple activity significantly, the brewery industry is on the course for profit, because in Q1, the profit before tax that was $7 billion in Q4 last year had risen to $81 billion by Q1. So if that momentum is kept based on our simulation, we think that the brewery industry in Nigeria might be posting a pre-tax profit in more than 200 billion by the end of this year.
Right, and definitely we've seen the companies, not looking so bad, quite resilient so far, even with the macroeconomic headwinds. But let's look at the consumer now. From what you've seen so far, do you think the average Nigerian consumer, regardless of battling inflation and limited disposable income, have they been quite resilient, in your view?
Nigerian consumers are one of the most resilient in the world. I'm saying this because if you look at inflationary trajectory in Nigeria, the last time we had a single-digit inflation in Nigeria was in February 2016. So since March 2016, Nigerians have been battling double-digit inflation. And the inflationary pressure in Nigeria became exacerbated, so to say, from 2019, after the land border was shut in August then, for importation of food items. Yet Nigerians kept adjusting and driving their lives. So what a lot of people have done, especially, is to increase the purchase of what I would describe as sachetization, right? Why people are not able to buy as big as they used to buy before, they are still being resilient in terms of doing more to be able to meet their basic needs. Now, talking about the purchasing power, especially over the last 2 years, if you look at the magnitude of depreciation in exchange rate, because whether you like it or not, every Nigerian consumer are directly or indirectly affected by the FX issue, because even if you, as a consumer, you are not importing from abroad because you feel you don't earn as much, the companies that are producing those basic items you are using, those basic food items, the processed one, in fact, even the unprocessed one that is packaged, many of those packaging items are imported. We're talking about the brewing industry. One of the inputs they import is aluminum, which is a major commodity they source from Russia, Ukraine, which are regions that are under crisis since 2022. So by and large, every consumer in Nigeria, directly or indirectly, are affected by whatever happens to the exchange rate. And that's why we have the pass-through effects. The same thing on oil. But by and large, Nigerians have been very resilient. We talk about the increase in minimum wage last year. It's about 133% increase, right? From about 30,000 to 70,000. We still have about 8, 9, 10 states that have also not fully implemented that, right? We have the exchange rate knock-on effect since 2023 has been more than that. But yes, Nigerians have remained resilient. And the resilience of Nigeria materialized in...
And Damilare, yeah, you've painted a picture there of resilience, but I'm also curious, how much, can the average consumer take, at this time? Where do you see that breaking point?
The reality is that I strongly believe that Nigeria have seen the worst in terms of the knock-on negative knock-on effect of inflation on household. Yes, it can be argued that the current inflation reading in Nigeria may not be fully reflective of reality, especially following the rebasing exercise last year, early this year rather, where many people felt that how should 10% disappear from the inflation? Recall in December, inflation was about 34.8, and following the rebasing, it fell to 24, and now we're at about 23 level, which naturally is still very high because any double-digit inflation is outside the CBN target level. But more importantly, if you look at the indices that triggers inflation, you look at FX rate, right? Like I said, there was a time last year when FX rate was around 108 level. So now it is at 1516 level. That's stability. We might not feel the full effect now, but gradually. So one thing about prices is that prices are always downward sticky. It's easy for price to go up when there is a minute shock, but to pull it down is always a difficult thing. That's where the government also needs to be more proactive in their effort. Not only should you implement policies that will reduce the price of some certain commodities, but you must also follow it up with a lot of monitoring mechanism to ensure that those prices are reflecting. The reality is that around July, August, September last year, we have the price of some commodity that is using rice and beans, for example. The price per bag was almost 100,000, if not excess of it. But now they are both reduced to about 50, 60, 65 levels. So that's a sort of reduction. So what I'm trying to say in a nutshell is that Nigerians, in my own understanding, my own belief, is that Nigerians might have seen the worst of it in terms of inflation. The government just needs to consolidate on some of the relief we have experienced. Because if we have had FX price appreciated because of some of the reforms in the CBN, then the government now should be aggressive in trying to attract foreign investors. Because the more we attract investors to sectors where we don't produce adequately, the more we ease the inflation pressure on Nigerians going forward. Because once you supply more, the market dynamics will crash price. I don't know if you hear the chairman of BUA recently saying that once they fully operationalize their rice plant, price of rice will crash further. And that is reality. So because everything is more of law of demand and supply. I mentioned Dangote PMS the other time. If Dangote had not entered the market last year, PMS in Nigeria now might be around 1,000, 1,005 level. So what government just needs to do now is to create the enabling environment, addressing security issues, incentivize businesses to come in and produce locally, and that way inflation will gradually thin away, and Nigerians will have better purchasing power to live their life.
For PMS, if the Dangote refinery didn't come online, I felt a little shock in my body. I don't want to see that kind of price, for PMS. But going forward, when do you see this sector? When do you see them coming into full, profitability? And do you think that will happen in 2025?
2025 is already the year that the brewery industry will snap out of the 2 years loss-making record. Like I mentioned earlier, based on our own estimates, we think that the brewery industry is on course to making a combined pre-tax profit rather, above 200 billion. That will be the strongest in more than half a decade, because 2022, 2023, there was massive loss. 2023, 2024, there was massive loss, 265 billion, 363 billion. 2022, a sizable profit of around 17 billion. 2021 was also not huge. 2020, COVID was a problem. So the last time you have the brewery industry, doing very fine in terms of broad-based performance was as far back as 2017, 2018. So this year, we believe, barring any major shock, like the shock will be like that level of what we saw during COVID, will be the one that will throw the FX rate above 2,000 level, will be the one that would throw inflation rate, even with this rebasing, throw it back to 30% level. So once we don't see those kind of magnitude of shock on the economy, we think that the brewery industry is turning the tide in 2025 to the profit side.
All right, we'll definitely keep tracking that. Thank you so much. It was great having you, Damilare Ashimiu, macroeconomic strategist, AfriInvest Research and Consulting. Thank you.
Thank you for having me, Lady.